The Texas housing market is on the verge of a big collapse. With home prices already going down across much of the state, we are seeing major price cuts, which is good news for you as a home buyer in Texas. And in this video, I'm going to show you the cities and the counties across Texas where prices are going to drop the most. And the reason that prices are now dropping in Texas is due to a big surge in inventory. The number of homes on the market is now over 114,000 across the state, which is the highest level in at least 7 years. At the same time, the days on the market for the typical house is up to 58 days, also the highest level in 7 years. So when you have skyrocketing inventory and skyrocketing DOM, that puts pressure on sellers to reduce the price, like on this listing outside of Dallas. You can tell this is a 5-bed, 5-bath mansion that's 4,500 square feet. It's on the market for $775 grand in Sunnyvale, which reflects a $120,000 price reduction from what it was at in the middle of 2024. And you can see the Zillow value estimate on this house is now back to where it was in late 2021. Of course, those price points are still expensive. Many home buyers in Texas, especially the locals, cannot afford these prices that are already going down, and thus I believe prices are going to drop more into the future. Because if we look at the historical data, everyone, we can see that the mortgage payment to income ratio in Texas is still very historically out of whack. We calculate this data point by taking the typical annual mortgage payment and dividing it by the median income. And in Texas, you can see this mortgage ratio is now at 31% of income, which you could see is just historically very high. Prior to the pandemic, home buyers in Texas were only needing to pay about 20% of their income towards mortgage payments. So we're still a very overvalued and expensive level in Texas's housing market today, which has no doubt led to a big drop in buyer demand, which is now being combined with a big surge in listings from both builders and investors who are selling in Texas. So I expect the inventory levels in Texas to continue going up over the next 3 to 6 months as we continue to see this sell off from builders and investors. It means that many of these downward home price trends should continue. You can see as of August 2024, prices went down 0.4% in Austin, 0.3% in San Antonio, 0.3% in Waco and Killeen, 0.5% in Fredericksburg. They went down 0.2% in Dallas. If we look at the county level view, we can see the biggest declines in Dallas occurred in Collin County, Kaufman County, and Parker County in terms of values dropping. We can see in Houston, values were mostly flat, but down a little bit as well. Houston is performing a bit better in terms of Texas's housing downturn because there isn't as much inventory on the market in Houston. And really, if you're a home buyer or an investor looking to buy into Texas in the next 6 to 12 months and you want to understand the trajectory, you got to look at those inventory levels for your metro and county on ReVenture app. This is going to tell you where the market is trending in the future. And right now, we're going to do a rapid fire round and look at inventory in a bunch of these different housing markets in Texas because it's very important to understand the inventory trends. They are telling you in real time the demand and supply dynamics. So let's start actually with Houston because we're going to start with the best performing of the bunch. In Houston, you can see inventory has gone up, certainly gone up over the last year, but it's still, not that high above the long-term average. So we have a moderate supply increase situation in Houston, which is why the ReVenture app home price score is a 47 out of 100, which corresponds with stable prices. However, if you move on over to Austin, everyone, take a look at the inventory situation in Austin. We have now almost 11,000 homes on the market, which is by far the highest that we've seen in the last 7 years. So if you're in a situation where the inventory is this high, you're going to still experience downward prices. It's why the ReVenture app score for Austin Metro is 34 out of 100. In addition, San Antonio is another market with skyrocketing inventory. San Antonio has even more inventory than Austin now, almost at 12,000 active listings, 12,000 homes on the market. Head on up to Dallas Fort Worth. We can see there's 25,000 homes in Dallas, which is a huge increase. Inventory in Dallas is up 50% year over year. We have the highest level of supply in Dallas that we've seen in the last 7 years. And as a result, the prices are going down. I found this listing here in Frisco, which is a desirable suburb in Collin County north of Dallas. They just did a $50,000 price cut on a 5-bed, 4-bath, 3,000 square feet. Homes in Texas are really big. It's on the market now for $550, and you can see they've had to cut it quite a bit from what they listed at. They listed at $630, now it's down to $550. They say it's priced way below market, but I think houses like these are telling you where the market is heading into the future. Now, one issue I want to talk about with Texas in particular that we got to talk about now is some of the issues with climate, some of the issues with weather, and as a result, some of the issues with water and development. Because this is something that a lot of people have been talking about for the last 5 to 10 years in Texas, like, oh, it's so hot, they don't have enough water, and not going to be able to keep building. And it hasn't been really an issue up until maybe the last year or so. We've had multiple cities now in Texas issue moratoriums on new building because they grew too fast and now they don't have the infrastructure to bring in enough water, bring in enough services, and they're putting a halt to this construction. One such area is Princeton, Texas. Which is northeast of Dallas and Collin County, one of the fastest growing North Texas cities, is now doing a temporary moratorium on new home construction. It's a 120-day pause. They're not allowing any more building in Princeton over the next 3 or 4 months. Same thing for the city of Heath as well. A year ago, the city of Heath, which is also in the Dallas metro, issued a 120-day moratorium to save on water. I don't want to be too alarmist here. I'm not like a crazy climate person, but clearly some things are going on in Texas in terms of these towns growing too much, not having enough water. It's very hot. And so what does this mean for the future of Texas's housing market, especially in the short term? If we're not building enough, if we're going to stop building, is that going to cause a shortage? Well, let's take a look. So I actually isolated here on ReventureApp Princeton, which is, you can see, northeast of Dallas. And in the zip code governing Princeton, there's 272 homes for sale right now, which you can see is by far the highest on record. Like before the pandemic, there was 100 homes for sale in Princeton. Now there's 270 homes for Princeton. So this 4-month moratorium maybe was needed because this inventory situation means prices are likely to continue dropping here. So there's more than enough homes for sale in Princeton. Also in Heath, where there was another moratorium instituted. You can see we also have more than enough homes. We have the second highest level of inventory on record in the late summer. And one thing I want you guys to understand is the dueling realities here of what we're experiencing in Texas is that, yes, Texas is a strong population growth area. If we change to the population growth metric on ReventureApp, we can see like in Kaufman County, the population is up 44% the last 5 years. That's the strongest of any county in America, actually. And you can see Ellis County, Collin County, really strong population growth. These counties in red mean high population growth all across Texas. Williamson County, north of Austin, 23%. Comal County, between Austin and San Antonio, 30% population growth. Montgomery County, north of Houston, 20% population growth. So yes, it's a fact. Texas's population in many areas has boomed over the last 5 years. So that's a fact. However, what you need to marry that with now, if you're a home buyer, is that many of these high growth counties are now significantly oversupplied. So if we switch this metric to the inventory surplus or deficit, we can see a massive inventory surplus in all of these areas. So, we talked about Comal County, right, between Austin and San Antonio. I know some of you are looking there, New Braunfels area. Highest level of homes for sale in 7 years. So that population growth narrative is now clearly being outweighed by a home building and investor sell-off narrative in Comal County. If we head to Williamson County, north of Austin, what do we see? We see inventory also at its highest level in the last 7 years. So we have more supply, more people selling in Williamson County. And it's the same situation in all of these kind of suburban counties surrounding Dallas, Ellis County. Oh my goodness, highest level of supply we've seen, double what it was before the pandemic. And so this is why I feel pretty confident in predicting that prices are still going to drop in Texas over the next year, is that the supply situation is so big, so huge, and it's going to continue due to the builders and the investors that we're not going to see immediate relief in terms of lower inventory and higher prices. We're going to have to see prices drop by more. And I think what's happened in Austin is going to be a leader for what happens in the rest of Texas. Values are down by 20% in Austin. I can show you some of that data right here just so you can get a sense of this. Because on ReventureApp, we have a useful data point called percentage change from June 2022 under home prices and affordability. This shows you how much values have dropped from the middle of 2022, which is kind of the peak of the bubble. In Austin, you can see minus 18.3%, whereas in San Antonio, we're only minus 4%. In Dallas, we're only minus 2%. And I think Austin was the leader, right? Inventory grew in Austin first, price cuts grew in Austin first. So I think San Antonio and Dallas are going to experience kind of more of what Austin experienced in the coming months, in the coming quarters, which is, of course, good news if you're a home buyer in these areas. It will get more affordable. And, some of these declines in Austin are pretty amazing. Like this is a 3-bed, 3-bath, 1,500 square feet. in Austin. 310 grand. This is a house that definitely could use a renovation. That kitchen is definitely a little old. That tile's not so great, but still, like, I mean, this is a livable house. This is a starter home, big backyard. I mean, you could definitely have a family here north of Austin, and it's 310,000, 1,900 a month typical payment with a mortgage. And you could see the market value of this house peaked a couple years ago at 463,000 and is now down to 300,000. So you'd see just on this listing the decline, right? Like, and imagine you're the owner of this house. You thought it was worth 460, now you're selling it for 300. Huge correction. And what's interesting is the current value estimate is now matching what it was back in March to April 2021. So we've erased a lot of that pandemic appreciation already. Prior to the pandemic, this house was worth 230,000. So maybe it goes down a little bit more, but I think Austin is a market that will be one of the first to bottom. Prices in Austin were about 50% overvalued 2 years ago. Now they're about 12 or 13% overvalued. So Austin still has some downside left. However, I think this is a market that maybe in 6 to 12 months, after prices drop a bit more, could be a buying opportunity. And let me show you real quick how to assess that. If you're a buyer wanting to understand kind of when the fulcrum is going to shift and when our price is going to become affordable, when should you buy? Take a look at Austin, particularly the overvaluation metric. So the overvalued percentage in Austin is something I want you guys to look at. We were at 50% overvalued 2 years ago. Now we're at 13% overvalued. Once we get more towards this center line, fairly valued, I don't think prices are going to drop by that much more. Maybe they will a little bit, but generally, if the market's still heavily overvalued, there's still downside. If the market's fairly valued or undervalued, like Austin was for much of the last 20 years, it's not going to be as much downside, maybe more stability, maybe some upside. And currently, the most overvalued market in Texas is Dallas. Dallas is 30% overvalued, particularly Dallas County, Tarrant County, 37% overvaluation, 33% overvaluation, Collin County. So yes, prices are starting to drop. Things are getting a bit more affordable, but we're still really expensive compared to what we used to be. And so if you're a home buyer in Texas, in any of these cities or any other part of America, I want you guys to pay attention to the data for your market so you can make a more informed decision closing out 2024, going into 2025. Make sure to check out that overvaluation rate for your city and zip code. That's going to help you figure out if prices have more downside or if they have more upside. Additionally, take a look at those inventory levels for your city and zip code. That's going to tell you if market supply is suggesting that prices are going to go up or down in the near future. And finally, look at the Reventure app home price forecast score for your area. This is a score from 0 to 100, which is basically an assessment of where the data is suggesting that prices should go in the future. If the score is below 50, that indicates more of a declining market. If the score is above 50, that indicates an appreciating market. You can access all of that data on Reventure app for $39 a month. $39 a month, everyone, under the premium plan. Well worth it compared to the cost of buying a house in Texas, which is between 300 and 400 grand. You're going to want peace of mind on your side when you make your purchase. So head to www.reventure.app and sign up for that monthly pass.